In today's session of Market Movers, we will take a look on the Euro USD, which looks poised for the levels of 1.2, and in past couple of sessions, it has consolidated in the range of 1.17 to 1.19, and again on the lower side after finding some support, it is trying to rebound. And in yesterday's session, we had seen this possibility. And in today's session, we have now further confirmation of this consolidation which is going on, with the bias being on the bullish side. So let's see how things are likely to unfold in today's session. If you consider the trading context, we had a lot of data coming in during the Asian trading session as well as the European trading session. Even for the US trading session, we have the data docket which is kind of full. For the China, we got multiple data releases on the economic front. We got the house price index, we got fixed asset investment, and apart from that, the industrial production, retail sales, and the employment rate numbers were also released. And here the key numbers related to the retail sales and the industrial production are kind of mixed. We are seeing that for the month of July, the retail sales are lower, but this decline is not as high as it was in earlier months, and now the decline is only of minus 1.1%, and the industrial production is also showing robust increase here. And for the month of July, in terms of year on year, there is a growth of 4.8%, and the unemployment rate stands unchanged at the prior levels of 5.7%. Moving on to the European trading session, we got the trade balance data, and here, beating the expectations, the European Union has shown the trade surplus of euro 21.2 billion, which is almost double the estimates and also double the prior month's numbers. And employment change, there were job losses actually for the second quarter of 2020, and these were expected, and these are the sharpest, or you can say the worst job losses which we have seen since at least 1995, when the data gathering began, or you can say record keeping began. Moving on to the North American trading session, just a while back we got these retail sales, and here for the month of July there is robust increase, and in terms of year on year, the retail sales are higher by 2.7%, and since this reading is only till the last week of July, and till then we had the unemployment benefits in place. So because of that also, the people were not really cutting their budgets, and I think the picture is likely to change a bit once we see the new reality where the unemployment benefits have been curtailed. So for the month of August, we might see some reading which is likely to be lower than what we saw in the month of July. At the same time, we also got the unit labor cost, and for Canada, the manufacturing sales numbers were also released, but we will not go into the details of that. And later on, we are scheduled to get the University of Michigan's economic survey data, consumer survey data. And here, if we consider the current conditions, then we are likely to see the deterioration for the month of August compared to the prior month, and the inflation expectations are also likely to tick lower to 2.5%. The consumer expectations are not likely to change much here. We can expect slight increase to 66.5 compared to the sub 66 reading which we saw for the month of July. Now let's move on to the technical aspect. Here we will first see the Euro USD, and then we will move on to the NASDAQ. Let's start with the Euro USD's technical outlook first. This is the daily time frame chart, and this consolidation which has been going on for almost 2 weeks in the range of 1.17 to 1.19 is still holding well, and these levels are 100% Fibonacci expansion of its prior rally, starting from 1.08 to 1.14, and then we saw this consolidation, and again the rally began, which now again entered into a consolidation phase. But still, I think on the higher side we can expect the levels of 1.2 in coming session. If you observe this consolidation, the correction hasn't been that sharp. We didn't really experience much of heavy selling in the Euro USD, though it has rallied substantially, and that kind of increases the chances of Euro USD again breaking on the higher side and getting past the 1.2 zone. And that's what we are betting on from the lower time frame perspective, and mostly we will have to now rely on the 4 hourly and hourly charts to see if there are any opportunities which are likely to come our way, of course if we keep watching. And here the regression curve has flattened as the price action has also flattened, and you can say that because of this sideways momentum which we are seeing in the Euro USD, this flattening of the regression curve has happened, and now it's going to be crucial for the regression curve as well. If we don't really see a break on the lower side and after due consolidation the momentum picks up, then we will not really see much bending of the curve on the lower side. But if this support zone which is there around 1.18, if it doesn't really hold and if we see the Euro USD moving lower, then of course we are pretty much headed to the 1.16 zone. But in today's session, I think the possibility of Euro USD continuing to move higher is still lot stronger than it breaking on the lower side, and we are really counting on the possibility of Euro USD consolidating and moving higher. If we consider this pivot point series here, this central pivot point is there around 1.16, and as long as the price action has concentrated in the upper band of this regression in this pivot point series, we don't really need to be that bothered. Of course we will be trading with the stop loss, and for us there is nothing certain, but on the lower side we have this support zone of this prior swing high, as well as this prior consolidation zone on which we got this break around 1.18. We have this 100 SMA also around 1.178, and the 200 SMA is there. So we have this confluence zone of 50, 100 and 200 SMA around 1.18, and taken together this zone is likely to act as a support for Euro USD, and because of that we are feeling confident here that Euro USD after this consolidation will again break the ground on the higher side and continue to rally towards 1.19 at first, and if it is able to break above 1.19, then naturally the next target zone will be 1.2. So here that is the possibility which we are betting on, and for us the stop loss should be good enough for around 1.175 to 1.174, and any entry in the vicinity of 1.18 should hold well. So for a risk of around 50 to 60 pips, we will be almost targeting 100 pips on the higher side or even more than that, and it will give us a risk reward ratio of 1:2. Now moving on to the NASDAQ's technical outlook. This is the daily time frame chart, and in yesterday's session we had considered the weekly time frame chart, and there I had explained to you this Fibonacci expansion, this prior rally which ended close to 10,000 level, and then we plotted this Fibonacci expansion after joining the prior rally and then recent swing low around 6,700, and if we consider this expansion, it has crossed the 100% zone as well. Now after consolidating closer to this 100%, the NASDAQ has rallied higher and it is holding well above 11,200. So on this daily time frame chart there is not much which will help us determine the exact entry or exit points. Only thing is that It is pointing to the continuation of the bullish momentum in the NASDAQ, and now we will have to mostly rely on the lower time frame chart on the 4 hourly and then hourly chart. And on the higher side, we indeed have these resistance. We saw this reversal happening exactly close to these first resistance of this month's pivot point series, and then the Nasdaq experienced a sharp sell-off of almost 4 percentage point. But then we are experiencing equally sharp rebound here, and after making low close to 10,850, the Nasdaq is again back to 11,200 zone, and the near term possibility is stronger on the higher side than the lower side, and that's what we are looking for in today's session. The regression curve is also pointing to the continuation of the upward trajectory, and this momentum is pointing to the bullish underlying momentum in the Nasdaq. And if we are going to profit from it, then we have to see what is the near term support on which we can go for the long trades. And here we have this confluence zone of 50, 100 and 200 SMA in the price band of 11,050 to 11,150. So here this price band is going to be of crucial importance for us, and any entry in this price band of almost 100 points, any entry anywhere close to 11,100 should hold well in today's session. So unless and until there is a break below this 11,000 zone, I would say that we can continue to look for fresh buying opportunity in the Nasdaq. And even though we are trading pretty much close to the all-time high, still it is advisable to keep the trade direction in the long side for the buy side. And if we are going for a buy trade anywhere in the vicinity of 11,100 with the stop loss coming in around 11,950, that's a 150 points stop loss. I think on the higher side we can almost target the 11,500 zone, and that will or even below that we will get the risk reward ratio of 1 is to 2. As for the risk of 150 pips, we will be targeting at the bare minimum this prior swing high, prior all-time high, which is just lower than the 11,300 zone. So here the roughly speaking 1 is to 2 risk reward ratio is assured even in that scenario. And if things hold well, and if we get a break above this prior swing high, and if the break holds well, then as I said, we can continue towards 11,500 levels as well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. It's Friday. Have a fabulous weekend. See you on Monday. Goodbye.